You probably never realized your dad bod could cost you real money. But life insurance companies definitely have. They use BMI to decide whether you're low or high risk. And if you fall into the wrong category, your premium can double instantly. This isn't about judgment, it's about understanding how the system works. Life insurance underwriting is based on simple, measurable factors, and BMI is one of the biggest factors they use. The surprising part is how small the changes need to be. Just 5 to 10 pounds can push you across a pricing line, and that tiny shift can add hundreds to your yearly costs. Most men don't even know their exact BMI category. They just assume they're a bit heavier than they used to be. Meanwhile, insurers see a higher risk profile that demands higher premiums. For many companies, a BMI under 25 puts you in a preferred category, but as you creep into the 28 to 30 zone, rates increase quickly. That's exactly where many dads land without realizing it. To insurers, it's not about how you feel, it is about how long you're likely to live. They rely on risk charts, mortality tables, and statistical patterns. And those patterns get worse as BMI. If you're slightly overweight, your surcharge is noticeable. But once you hit the obese category, the penalty jumps dramatically. Some carriers will double your premium on the spot. A policy that should cost $40 a month can suddenly cost $80 or more. If you're older when applying, the increase is even higher. Age multiplies every risk factor. The frustrating part is that BMI isn't a perfect measurement. It ignores muscle, lifestyle, and metabolic health. But insurers use it anyway because it's simple and standardized. That means the smartest move is to work within their system. Dropping your BMI, even a small amount, can unlock cheaper rates. And unlike genetics, this is something you can control. Many men can move from standard to preferred by losing just 10 to 15 pounds. That shift alone can save thousands over the life of the policy, and it's very achievable within months. A realistic plan starts with reshaping your food environment. You don't need extreme dieting or starvation strategies. You need small, consistent changes. Start by swapping sugary drinks for water or zero-calorie options. This one step cuts hundreds of calories a week, and it barely requires any willpower. Next, increase your daily protein intake. Protein helps keep you full longer and reduces random snacking. It also supports muscle as you lose weight. Fill half your plate with vegetables when possible. They're low-calorie, but have volume, which helps control hunger. Over time, this creates steady weight loss. You don't need a gym membership to start burning calories. Walking 30 minutes a day is enough to make measurable progress. Consistency will always beat intensity. To speed up results, add to short strength workouts weekly. Even body weight exercises like push-ups and squats work. They boost metabolism and preserve muscle. Every small habit adds up. One fewer snack, one more walk, one cleaner meal, it all compounds. And insurers reward those results financially. You don't need to become a fitness model. You just need to cross into a cheaper BMI category. That's a 6-month goal for most dads. Track your weight once a week using a simple digital scale. You're looking for trends, not daily fluctuations. Slow progress is still progress. Getting 7 hours of sleep helps more than most people realize. Poor sleep increases hunger hormones. Better rest boosts fat loss naturally. Managing stress also makes a difference. High stress can slow weight loss and increase cravings. Even 5 minutes of breathing exercises can help reset your system. Many people don't know they can request a rate review after improving their health. Some insurers allow a reconsideration after 12 months. If your BMI improves, your price can too. This makes your health journey a smart financial move. You're lowering both your risk and your premium, and the savings compound for decades. Think of this as part of protecting your family financially. Life insurance is a safety net, and getting the best rate is part of building that safety. Lower BMI means lower cost for the same coverage. This isn't about vanity, it's about strategy. Lowering your BMI is one of the few guaranteed returns you can get. Health improvement equals premium savings. Your dad bod might feel harmless, but insurers calculate it differently. Fortunately, You can influence how they view your risk. You just need a few sustainable lifestyle changes. So instead of thinking of this as a diet, view it as a money-saving plan. Your body becomes part of your financial strategy, and that strategy pays off for years. When you drop into a lower tier, you save money every single month. Your health improves, your wallet improves, and your family benefits. That's the real win behind beating the dad bod penalty.